Hi everyone, welcome back to my channel. Today I'm reviewing my Roth IRA account as of Friday, 12th of May. I'm working on the beat SPY strategy. Essentially, I sold 100 shares of SPY and I'm trying to generate additional income from selling covered calls. And since I have 100 shares of SPY, I can only sell one contract at a time. The goal is to generate additional 6 to 10% of income in the next 11 months. So far, as of last week, the profits from the covered calls were about 2.5%. So we are well on target. Here are the trades I've made so far. So initially, I bought 100 shares of SPY and sold one covered calls. Then the call expired. I sold another one, etc., etc. I also got a dividend a couple of weeks ago, and I used the dividend to buy a fraction of one SPY share. So this is the most recent trade. So last week I covered the call expiring last week and started a new position expiring a week from today. And the amount of money or the amount of credit what we got was about $144. So last week we just rolled. And so SPY closed around 412, a little over 412, and the covered call was at 140. And so since SPY was 412, covered call 420, so that's about 2% out of the money. So that's good. That's where I want to be. This is a safe place, kind of, not as much risk of being assigned and still getting some decent premium. So today I was actually considering rolling the calls to 1 week later expiration. So instead of the call expiring on May 19th, I was considering the call expiring on May 26th. And you can see if I rolled it, so the May 19th call, the price was around 15 and 15 cents. And then the call that I wanted to roll into was, around 65 cents. So say if I got the best price I could roll for 50 cents, but that's very little. And in addition, that would increase my risk, right? I could also roll to lower strikes since, SPY at the time I was looking was 409, so I could go a little bit tighter. But again, that would increase the risk because I really expect SPY to go up anytime soon. So I'm keeping all the expirations not too far away, and then I don't want to be too close to the money with the strike prices. So at the time I was looking, that was around 2 hours before close, so I decided to stay. And then I monitored the position. SPY actually went up. You can see it went up by another 2 points. And the call that we have stayed about the same because of theta, right? You can see the delta and theta are about the same. And so despite the SPY going up, the time decay kind of worked against it. Here, delta is a little more. So because SPY went up, the time decay still worked against it, but not as much as in the case of the call expiring on May 19th. So in other words, the price of the call went up. So if I waited till the close, I could roll it for say 63 cents or something like that, which would definitely be better. But I am really expecting SPY to go up, and I prefer, for now at least, to keep the position that I have expiring in a week from today. So I decided to stay again. So here's my position at the end of the day. So I have a little over 100 shares of SPY and one covered call. And you can kind of ignore the rest. I have the Rhythm and Starwood, and they are not doing too well, actually. But as I said, I am expecting for these stocks or ETFs to fully recover, hopefully soon. Okay, so this is the action in the market. As I said, SPY it has been trading in a range, in a relatively tight range here, right? And even in the last week, even tighter range. just here. So it's like a spring, it's coiling, and that finally it will unload. I'm hoping it'll unload to the upside, but I don't want to be caught with some short calls that expire, several weeks from now, and then the market just keeps rushing past my strike price, and then I would have to manage it more carefully. In any case, as I said, I'm expecting SPY to go up, but I just don't know when it's going to happen, or I don't even know if it is going to happen. So we are keeping, the short calls and taking advantage of the time decay. So here it is in more precise numbers. As usual, I'm looking at this column right here, the yellow one. That's where the profits from selling the covered calls are, right? So as of today, the profit from covered call is a little over $1,200, which is actually about 3% of the initial premium or initial money that I put into this position, right? Into the SPY plus covered calls position. SPY itself, profit is about 2.5%. Actually, no, it's more like 2%. And the profit from SPY call is about 3%. So we are doing really well. The combined account is up about 5%, which is great in, let's see, 3.5 months. So in 3.5 months, we got 3% from the covered calls. So we are well on track to get the 6 to 10% for the entire year. And here in the graphical form, you can see it better. All right. Initially, the covered calls we were losing some money. And then as the time went by, if you keep doing the same thing and if you do it correctly, essentially there can be some issues. Of course, you're going to lose some, you're going to win some, but overall, in aggregate, we are doing really well. And SPY, the blue lines, also doing quite well. That's the 2% profit. And all in all, in combination, those are the orange lines. We are about 5% profit in 3.5 months on the account, which is great and definitely better than what the market is doing. So plans for next week. There's the big question: will the markets finally go up? And I really think so. I just don't know when. I think once we resolve the budget issues, where essentially US is on the brink of defaulting, but it has never happened. Congress and the Senate and the president just have to agree to raise the debt ceiling. And once they do, I think the markets will be happy and finally go up. And it can happen next week, or we may have to wait a little bit longer. So sooner or later, I will have to roll. I may wait till Friday, or depending what the market does, I may wait. I may roll earlier during the week. And that's about it. As I said, I really want to keep the expirations not too far away from the current date. So if I roll, most likely, actually, I'm not so sure. So it'll either be 26th of May or 2nd of June. Depends how the market behaves. So that's all for today. If you like my presentation, please click the like button below. Also subscribe to my channel. There is many more presentations coming up. I'm actually working on a presentation for our option school, which is going to be the basics of covered calls plus some studies on how to manage covered calls correctly. So that's all for today. Happy trading.